Welcome back. You're watching Indian Open right here on BloombergQuint Live. While the US markets shut shop with gains of 4% plus, Asia is not really reflecting the same exuberance. We've got Shanghai, which is up 1.6%, Hong Kong, which is up 0.5%, while Japan trades absolutely flat. For the SGX Nifty as well, it's a marginal uptick of about 0.25%. But I guess now the concerns get more domestic. They come onto the Indian shores with, 2 new fresh cases of coronavirus. And that was the reason why that sudden panic creeped into the markets towards the dying moments of trade yesterday. Good morning, Neeraj.
Morning, Devina. I dare say, for the world markets as well, I think they took notice of those flashes yesterday. At about 2:45 India time. The question is, can we shrug off? I actually did the trade setup also with that question, that can we shrug off those local coronavirus-led fears and join the global party? If indeed there is a party tonight and the global central bankers go out and take some coordinated action, I think that's, from a global market point, that's probably the biggest thing that everybody will be watching out for.
Conversations globally, any which ways, have already factored in at least 2 Fed rate cuts going forward. There is, right before coronavirus, there was the tapering of liquidity. They were pulling back on liquidity, and that now seems to have halted. And in fact, they're getting more aggressive in pumping in more money into the economy. And up until now, we've known and seen what cheap, easy money has done to the equity markets. So if that continues, then at least, in US, that could probably lead to some more money going into the equity markets. But we tend to follow what the global markets do at this point.
Well, I think right now, bulls will be hoping that that's what happens.
Yeah, so let's see. And yesterday's session was also important to see what kind of setup happened in the futures and options space. Gives you an indication of how we're likely to do going forward. VIX spiked up, but Amit is joining in right now. Nami, just the fact that we started off the first day of this new series on extreme amount of short positions getting built in the system. Did yesterday change any of that?
Oh yes, especially on the FI side, but still I want to mention it's becoming exceedingly difficult to trade in a market like this. We had a gap up opening, we gyrated almost 400 points and finally closed in the red. So of course people who would have thought that the gains will be sustained, it did not actually happen. So far it was the global factors, but now we are taking cues from domestic market, and with a 5% pop up and down, you're just seeing SGX Nifty. It's off the day's low, but still up about 40 points. So what happened in our markets yesterday? There was majorly unwinding seen for Nifty futures, which closed at a discount, and the good point was actually the discount narrowed from those 50 points to 6 points. For Bank Nifty futures as well, there was largely unwinding of 7%, and Bank Nifty futures actually closed at a premium of about 7 points. Yes, volatility spiked once again after rising 70% last week, so these are really not comfortable signs, at least for the bulls. 25 is a higher level for India volatility index. Moving on to this week's expiry, what you can expect, even the activity on the option side, I think data is just scattered, so it's becoming difficult to even pinpoint what should be your support and resistance. If you're trading still today, if you have the gumption, I'll say watch out for yesterday's low and yesterday's high. That should be your support and resistance. So that's the distribution. But let's just pull out what happened yesterday in terms of activity. There was more call riding visible once again. So you had strikes like 11,400 and 300, where majority of the build-up came in. In terms of individual stock futures then, of course, Escorts was the star performer. Fresh long positions were seen. Bandhan also did pretty well. And PVR, now there's a fear that crowded places, people will refrain from that. So short positions were seen there. Indigo as well, fresh shorting coming in there. I just want to pinpoint, sorry, the FI data. Finally, there are some signs of unwinding of short positions. So unwinding of nearly 31,000 contracts, and the options data also looks pretty encouraging. With that, it's back to you guys.
Right, Navneet, thanks very much for that. In fact, let's go straight to getting in our market voice. Then Mayuresh Joshi, head of equity research at William O'Neill India, is joining us right now. Mayuresh, difficult times. I mean, we were already, facing the wrath of the sell-off in the global markets, but looks like there's no mood to stop this panic selling anytime soon.
Oh, absolutely. Morning, Divina. Morning, Neeraj. So we discussed on Friday, right? And I think the panic and the fear in the market still continues. So I think on one side there is talk that there might be concerted central bank action, probably giving monetary support. On the other hand, you are going to see spike in the number of cases that are getting reported on an everyday basis. So when you probably look at your on your laptops and try and search what is happening around the globe, I think there are cases which are increasing by the numbers.
Save for China, where the cases are coming off.
Exactly. So I think that's where the entire issue lies. How are you going to contain that? how much more in terms of transmission. And markets really don't like all this overhang, right? So even if a stimuli does come through, I think what sort of an impact does that really create from an economic standpoint is a different issue altogether. But the implications of this, I think, will still continue. So our methodology at William O'Neill Cancel probably still suggests the low that it cut yesterday. So I think the undercutting of Nifty lows every day, unless it subsides and it shows some amount of resistance with a 3 to 4 day move on the higher side on a daily basis, I think that is the time you should get in. So that's the logic that we were trying to apply on Friday itself. The market clearly in a downtrend. I think you should be probably timing the market at this point of time. Whether you should be buying in at this point of time by putting in 10%, 15%, I think it's still time to wait. I think let those 3 days come. If those 3 days come in a trot, there might be some confidence in terms of price volume action coming back. Can't rule out bounces like we saw yesterday or central bank action which can create spurt in the market, but let's wait for that. I think let's not preempt and time the market at least at this point of time.
So, I mean, we talk about liquidity creating spurts in the market, but that spurt is not going to negate the fact that the economic slowdown is an inevitable event. So in light of that, it's about how much you want to ignore that in just backing it with the liquidity sloshing around, and therefore, which has been the case. US markets, cheap, easy money has led to a decade-long bull run.
Oh, absolutely, I think the markets to a certain point will then start factoring in liquidity and ignore the economic aspect of it. So I think over the next few weeks, the hope is that at least the health-related scare for coronavirus starts coming off. If you do have the central bank stimulated action in a concerted manner globally, I think markets will pay more heed to that because you've got liquidity which is going to come by leaps and bounds, and asset inflation will again start moving up, which is obviously in terms of equity prices across the globe. Having said that, the economic implications are going to come through, so there are no two ways about it. You are going to get your GDP forecast slashed down on an annualized basis. But again, I think you've seen that historically as well, even post-SARS, though it's not a apple-to-apple comparison. I think once those activity resumes, I think it resumes in a significant fashion. And China still is maintaining, Neeraj, by the way, that they will still maintain their GDP forecast for the entire year. So let's see how this pans out.
What about the local fears, Mayuresh? Yesterday, because of those 2 new cases detected, a bunch of, I mean, the trying to measure the economic impact is probably a mug's game right now. But company-wise impact, do you think there was an overreaction on say an Inox Leisure? Maybe travel could go off a bit, airports, etc., but an Inox Leisure, a Delta Corp, or Phoenix Mills, was there an overreaction or was this justified?
So I think it is.
Considering they already run up, so Inox had moved up quite significantly.
So I think, as I said, there'll be plenty of reasons flying around for all the stocks which had moved up significantly, right? And there is some element in terms of how the global situation is being controlled. So I think lockdown, people not allowed to go outside. But I don't think that's the situation right now. So it's more fear at this point of time and more panic.
So smart investor makes use of fear, right? My question is, would you make use of this fear in some of these pockets?
You ideally should, because I think if the companies are projecting strong earnings growth, and we are not in a situation where there's a lockdown here at this point of time. So there is absolutely fear and mayhem in the markets for certain sectors like the stocks that we just discussed, which absolutely got hammered yesterday. But you never know, I think, and that's the whole reason why I'm again trying to point it out, right? I don't know the implications of how much is this going to quadruple or compound in terms of the number of cases reported in India. Because looking at our population and looking at how we are placed at this point of time, if this does increase in a significant manner, I think it's going to be a tough ask. So I think there are some fears, but I think a lot of them are more compounded at this point of time.
Well, I think time will tell in the next few days as to whether this fear needs to expand or does it need to get contained a bit. Brijesh, the other bit is this big IPO that is open, and I don't know how you guys have looked at it, but SBI Cards has gotten subscribed about 40% on day one. There's no doubt that it'll get subscribed for sure. The question is, what kind of excitement does it stay? Now, even if we work with an assumption that the excitement around it would come off a bit compared to what was earlier.
Sure.
For somebody who's thinking of whether or not to invest in the IPO itself, in the retail category, is it a sure shot subscribe?
Yeah, so I think the fundamentals are justifying that the IPO is very, very well placed, right? So if you look at the numbers over the past few years, they've probably justified that in terms of tremendous top line growth, bottom line growth, and asset quality actually has got maintained between that 2-2.5%. So largely an unsecured business, but again, I think the two streams that come through, both in terms of interest income and fee income, actually support the earnings growth going forward, and that should support it going forward as well. So I was doing a simple comparison check between us and the US market in terms of the credit card industry itself. So if you leave aside the two merchants, right, Visa and MasterCard, I think outside of those, I think if you look at the bigger banks, Chase, for example, has got around 70-80 million cards which they have got in circulation. Citi has almost got 60 million odd cards. How are we stacked up against those guys? SBI cards 10-11 million, Hdfc 14-15 odd million. So if you take our entire credit card circulation, that does not even match the top credit card issuer in US.
And neither is the valuation, because they are at 9 to 13 times, and SBI cards is valued at...
So I was looking at your piece. I had stepped into the office early, and you did a brilliant piece in terms of the comparisons that you had done with the PEG ratio, because I think that is very, very relevant in terms of the PEG ratio that you compare us and the global peers as well. The global spend per card is humongous, so I think we are nowhere near that. So the opportunities exist. So the bottom line is that there are huge opportunities that will come through. So it is very, very sweetly placed in the niche category that it is. But if you don't get the IPO, I think what our methodology suggests is that we have a methodology called as an IPO base, right? So if the IPO does list at a certain price, which is at premium, say to the CMP or the listed price, and if it does not correct significantly, it's a shallow correction, and over the next 4 to 5 weeks, if it consolidates and then it shows signs of making a proper base, I think you can even enter that at that point of time. So there is no reason for losing hope. You've still got an opportunity, because we've seen that in the past happen with DMart, Apple, IndiaMart, and all these IPO bases have worked beautifully. So I think there is no reason that you should probably get disappointed if you don't get an IPO. Maybe the secondary markets can help you out.
Very different situations.
Yes.
Very different environments in which they listed also.
Yes.
And that's SBI cards for you. But definitely, most analysts are recommending a subscribe to the IPO. Whether you get it or not, you'll have to see. But also interesting to see what brokerages are saying this morning. What are the other stocks in news that you need to keep a track of? While the Nifty itself is, the SGX Nifty is flat, slightly positive. Maybe you'll see better reactions in stocks. Nikki and Shivali both are here with us. Nikki, let's start with you first.
Sure, I'm going to start off with Hero MotoCorp numbers, where the total sales are down by as much as 19% to a number of around 4,98,000 against the estimate of 5,10,000. We're also looking at Cox and Kings. This one is going to be an interesting one, given the Resolution Professional have sought a stay on sale of UK assets. The newly appointed auditors have said that the erstwhile auditors have used allegedly the forged financial of a subsidiary, Promethean Enterprises, in the consolidated financial statements of the company. So that's going to be one interesting bit that we like to keep an eye out on. Parag Milk Foods, where there is a clarification coming in on account of pledged shares. The promoters clarified they have an overall pledge of around 1.87 crore shares with Kotak Mahindra Investments. They've said that the promoters have already repaid 31 crore, and the outstanding loan amount of roughly 33 crore will be cleared in next 90 days. We're also staring at number of defaults by 3 companies. First, to begin with, Tilak Nagar Industries, where the company has defaulted in payment of a term loan, which is to an extent of 15 crore, due on Jan 31. We're also looking at DB Realty, where the company has defaulted in payment of intercorporate deposit worth around 85 crore, due on Feb 1. And last on the list, we're looking at Reliance Capital, again makes it to the list, which is defaulted on term loan on Jan 31st, which was due to Hdfc and Axis Bank.
All right, Nikki, thanks very much for that. What are brokerages saying this morning, Shivali?
Well, the first one is Citi on Volta. So IMD has put out some forecast where they're saying that the temperatures this summer are going to be a bit higher than normal. So that will bode well for the AC demand, and hence for companies like Voltas. And also large manufacturers have taken a 3 to 5% price hikes recently. So that too will add on to the revenues of the company. Component prices have increased on low production in China and also because of the higher shipment cost, and so on the back of that they've taken the price hikes. So Citi is maintaining a buy call on the same with a target price of 794, and also HSBC has put out a note on Marico. They've upgraded the stock to a buy rating post, and also they've cut down the target price to 370 versus 400 rupees a piece earlier. So why they've upgraded the stock? They're saying that Marico has corrected about 25% from the peak, and the sharp correction seems to be overdone now. And the decline was primarily due to past 2 quarters of muted operating results and uptick in copra prices. So on the back of that, there was a correction seen in the stock, but now that's overdone. Risk reward looks favorable now, and volume recovery from here on will drive re-rating for the counter. They've cut the estimates, the price target basically post the Q3 earnings, but valuations wise it's looking cheaper now.
All right, guys, thanks very much for that. Mayuresh, just comment on some of these white good companies. We spoke to these retailers, Croma, Vijay Sales, and while they said that business is expected to pick up, they also highlight the threat of there being a supply disruption from China. And if that happens, the 25% growth that they have factored in right now will seriously be challenged.
Again, I think, Devina, I think 2 perspectives here. One, I think the increase in duties, right, on compressors and so on and so forth from 10 to 12.5%, that is going to put costs under the increased element. The second element also is that supply constraints, and when we were doing a lot of channel checks, either they're stuck up at Chinese ports or you need to airlift those. So I think the logistic costs are also going to go up. So in that sense, again, I think the increase in input costs are going to probably get displayed in terms of prices or retail prices actually moving higher. And to that bit, I think how much of an impact does it have on volumes is going to be seen. On the other hand, I think the department has come out that this is going to be the hottest summer around. So I think a lot of these white good players, even consumer durable companies, simple fans, for example, I think all the manufacturers, they should do well. Because when you're probably looking at the entire value chain, I think fans, premium fans, air coolers, air conditioners. So I think this entire chain probably should do well.
The entire chain would do well, but let's work with an assumption. I mean, you got to pick and choose because you can't buy everything. One, would you buy them considering your hypothesis that don't buy into India right now? And if so, would you buy a Voltas? Would you buy a Symphony? Would you buy a Havells? Would you buy something else?
So I think on the watch list, we've clearly got a Crompton consumer because I think the numbers were very, very good in the last quarter. The expectation largely is that the volume growth should continue, market leadership position, because we like leaders in the market, 27% share in fans, number 1 player in domestic pumps, significant gain in market share for air coolers as well, because they've got into that as well, and other consumer durable items. So I think the only EBIT front which probably disappoints is the lighting segment. They're getting a few innovative products there as well. White good appliances, Voltas looks extremely well placed. So again, I think market share right there at the top. The number of inverters in terms of the overall sales, again increasing quite significantly. The tie-up with Beko, the losses in the JV are coming off, and the expectation largely is that as they start production significantly over the next few quarters, the fixed cost absorption should start playing out on the margins as well. So yeah, pick and choose. This is what we probably like to keep on our watch list.
Okay. The other question is, what have you made of the auto sales numbers? Because yesterday we saw the reactions that small positives gave to an Eicher Motors and Escorts, I mean, before everything came off. But the larger two-wheeler makers, both Hero and Bajaj, were under a cloud yesterday, and Hero's numbers don't quite inspire confidence.
Yeah, so I think that's going to be the case, right? And that's why the entire thesis at our end has been waited out for this quarter. There's no need to rush into those. You'll get better entry points. The logic is on, yeah. So I think except for a few exceptions, which I'll speak very, very briefly.
Sure, of course.
So again, I think if you look at numbers which are stacking up, the component issues are clearly getting played out. Hero had clearly warned, right? If these supply disruptions continue, I think a 10% kind of a hit is something that they'll take. Similar for TVS, for example. Bajaj, to a certain extent, is largely insulated because of the 50% export numbers and export sales that it has, both for two-wheelers and three-wheelers market as a whole, and those markets are holding up at this point of time. Maruti surprisingly had a very reasonable and a decent set of numbers. So if you probably look at the inner details or the finer details, I think if you exclude the Omni sales, because on a year-on-year comparison, 7,000 to 8,000 units were coming in from Omni, which has got discontinued. So if you adjust that, and if you adjust that against the new launches in their compact variant, I think it's a relatively good show. So if I stack it up, I think Escorts is something that we liked, and the management had clearly stated second half better than first half, both in terms of domestic and exports. The diversification in terms of less than 50, more than 50, very, very appropriately placed at 54 and 46 odd percent. There are new HP emission norms above 50 coming in from October this year. So there will be an element of pre-buying that will happen before the Kharif season, which will also give an element and a push through for the first half of the next fiscal as well. So yeah, I think very interestingly placed. Our cancelling methodology suggests that this is one stock that can do well over the next few weeks as well.
Okay, Mayuresh, thanks for those pieces of advice. Stay on. Let's get in our technical experts on board as well. Brijesh, Bhatia and Amit Harchekar join in with their sense. Gentlemen, both of you, very good morning. Thanks so much for joining in. Brijesh, let's start off. Indian markets not quite showing the kind of optimism that the rest of the world, or at least the US markets, were showing. What's your approach to trade this morning?
Good morning, Neeraj. So I think if you look at the market, we have seen a huge selling pressure in last weekend. Even if you look at yesterday, last hour was a negative biased. So I think Nifty, as if you look at, has taken key support level of 11,000. Plus, if I just look at the short-term daily charts, if it is taking support at nearly the rising trend line, or I would say the rising channel. If I just look at from the November lows, it has been trading in a rising channel formation. And yesterday, the low were exactly near the rising channel's low. Plus, if I just look at the weekly chart, we have been consistently respecting 100 EMA, 100 weekly exponential moving average. And if you look at the last 2 years of data, generally the Nifty's tendency of 0.8 to 1.2% of deviation from the 100 weekly average. And if you look at the yesterday's momentum, it was around 0.7% low from the 100 weekly average. Second, if I look at the relative strength index on daily chart on the Nifty, it has been rightly at the oversold territory and trading below the 30 mark or at around 20. So if you look at the screen on the charts, the RSI is nearly at around 23-24 mark, and price is at key support level. So we have previously also seen historically move when RSI goes below 30. We have seen a huge comeback from the Nifty on the positive side. So I would take a long bet, keeping a low of yesterday as a stop loss, and look for a target of around 11,362 on the upside. Slight minor resistance could be yesterday's high of around 11,424.30. But before that, I think March series might be slightly a range bound between 11,000 to 11,500.
All right, that is Brijesh's call on the index. So there are indicators and some patterns showing support levels from here. RSI is oversold. Probably that's where Brijesh is coming from in terms of expecting a bounce. Amit Harchekar, this has played out well because you've constantly been negative on the index. But where from here?
Good morning, Devina. See, we continue to see again selling pressure coming in Indian markets. If you see in Nifty from a 2 years perspective, we have clearly seen a breakdown on line basis, both on a weekly chart as well as on monthly chart. Basically, this breakdown is from the rising wedge on long-term basis, and that breakdown has activated below 11,400. I think that is the one reason yesterday pullback failed to sustain beyond 11,400. And I think from here on, you will see fresh round of selling coming in Indian markets, basically due to lot of long unwinding. On immediate basis, we are looking for a target of 10,865. I think that becomes a very strong support. Below that, I think there would be a lot of unwinding pressure. As we have clearly pointed out in last few weeks, that there has been a breakdown visible in Nifty consumption index, which is projecting a target of 15% lower even from current levels, and it was also backed with a very strong breakdown from a running triangle in BSE diversified financial growth index. Stocks like Icici Bank, Axis Bank are the heavyweight stocks in that diversified financial growth index, and that's why we don't see any signs of bottoming out for this market despite RSI entering into an oversold zone. Plus, we have a good punch coming from USD/INR with a breakout above 72.5, we are now expecting USDNR to cross 76 in the coming weeks, and I think that would drive Nifty quite lower. So view remains quite negative. I would suggest every rally should be used as a short-term opportunity.
All right, every rally is still to be used as a shorting opportunity, according to Amit Harchekar. Let's talk about individual stocks then. Amit, let me come to you first.
Well, first pick I would recommend would be going short on Icici Bank futures. Here the rationale, what I already said, the BSE Diversified Financial Index is projecting a 10 to 12% cut in a very short-term basis. Here the levels I would suggest would be opening up short futures in Icici Bank around 688, 690 zone. Stop loss I would recommend at around 718, and I would look for a target of 630. Overall, if you see the price action of Icici Bank in last 6 months, it has gone through a phase of severe distribution. Whenever such move happens, generally price decline by at least 25 to 30%. So I think Icici Bank is a good opportunity to open short even from a long-term basis. Our second pick would be going short on Larsen and Toubro. We think Larsen and Toubro now has broken all major supports, and we think now the stock would be heading to a 3-digit in quite some time. Immediate target we are looking at around 1100, and the stop loss for a short trade would be 1190 on a closing basis.
Okay. Brijesh, any buys on your list?
I have both the buys bet, Devina. So first would be the large cap, the Hdfc Bank. So if you just look at the Hdfc Bank, we have seen a huge outperformance coming on in the banking space from HDFC, comparing the falls with the other banks had. HDFC has been managed to hold its key support zone of around 1180, 1170 zone, which is again the nearly 3 months rising channel. Plus, if I just look at whenever the HDFC Bank retraces around 61.8%, it has a tendency to give a huge pullback towards the higher levels, crossing the previous highs. Though I'm not very much aggressive to look at the previous high, but if you look at the momentum-based RSI is trading in a negative zone. Stochastics in the yesterday session has managed to give a positive crossover. Momentum indicator has given a positive crossover. So I think at around 1180, one can take a long bet for the target of 1228 from a momentum point of view. In case this momentum continues, we might again see 1300 levels also, but purely I'm playing for a momentum based trade, keeping a stop loss of 1160. My second bet is on Bajaj Finance. So if I just look at the Bajaj Finance has a historical move of testing the previous all-time high and again gaining a strong upside momentum. So if you look at the recent momentum, we have tested around 4330, which was the previous high. And if you look at the 21 days average, it always respects the 21-day average, retests it and goes higher. Most importantly, if you look at the recent fall, we haven't seen a huge volume on the negative side from Bajaj Finance. So still, people are holding on to the stock on the positive side. So at around 4360, I would look for a target of 4640 on the upside, and stop loss can be placed at slightly below 4200.
Okay, gentlemen, thanks a lot for those ideas. On to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. What's the stock today?
Good morning, Devina. So we're looking at Dixon Technologies, and the stocks managed to snap a 3-day losing streak. In fact, it would have been a longer losing streak had it not managed to gain in one of those days. But still, we saw a big move yesterday, and despite our markets coming under pressure in the last 1 hour, it managed to hold its own and was up almost 3% in yesterday's day of trade. And with that, the stochastics indicator, that is suggesting a positive signal. So like we always do, let's first try and understand what the stochastics indicator is and how do you interpret it. The stochastics is basically a momentum oscillator, and it helps you identify when a price move is overextended and shows you the relative price to its highs as well as lows. How do you interpret it? Any crossover is a buy or a sell signal. Overbought is above the mark of 80 and oversold is below the mark of 20. Coming back to the price chart of Dixon Technologies, and we see that in the lower panel where the stochastics indicator is, we've seen that positive crossover take place, and especially the fact that it has happened below the mark of 20, which is the green line. So this is an early buy signal generated by the stochastics indicator. But from what I understand looking at the price is that if you join the lows to the high on the daily time frame, the price did come down to the 50% retracement of that move, which was around 3775 or 3778, and we saw that move up. So 3778 is a strong support for the counter from where it has bounced up. The stochastics indicates an early buy signal, and that should act as a strong support. support. Already we've seen a near 20% correction from its high of nearly 4,895. So the risk to reward ratio is also extremely favorable.
Okay, how well has this worked in the past?
Neeraj, 4 out of the last 5 times, and with this one being the 6th time getting triggered, the last 1 month average return on a closing basis have been somewhere around 10.5%.
Wow, interesting. Thanks so much for putting that into perspective, Yash. And Dixon Tech could be interesting. I have a couple of chart checks that I want, but Dixon Tech deserves a mention simply because they have told us on BloombergQuint that there could be a 2 to 3 to 5% impact because of the coronavirus led shutdown in China. But the stock is corrected quite strongly, Mayuresh. At 3935, does it provide value?
Yeah, so it's definitely one stock to be kept on a watch list because the impact is quite minimal, as you rightly pointed out, and it's far more diversified in terms of the lines that it is putting through, both in terms for television and the other consumer appliances as well. So it is very nicely placed. The entire push through for manufacturing in India and the SOBs given through the budget are going to benefit players like this. So this is one stock that you should keep on your watch list. As it confirms price action with market stability, I think this stock can be something that can be considered going forward.
Okay. Couple of chart checks. Brijesh, you were bullish on banks and financials, so asking you about State Bank of India. That cracked quite strongly yesterday. How did the charts appear?
I think, Neeraj, I would not be very much bullish on SBI because if you look at, we have seen a huge selling pressure right from 350. We have seen again a lower top forming at around 355, 345 and back to around 300 levels. Though it's hovering, if I just look at since we on the weekly chart, it's been hovering around 200 weekly since 2017. So I would stay away from SBI. I think better would be the private bank over PSUs. I'm not very much bullish on PSUs. I think Hdfc, Kotak, even ICICI Bank seems to be a good bargain buying levels, and I would look for private banks over PSUs.
Okay. Amit, while you are largely bearish, one auto name which actually did reasonably okay yesterday was Ashok Leyland. Can you look up the charts and tell us what do they indicate?
Well, my sense is if the stock declines towards 65-66 zone, I think it becomes a good phase for accumulating it from a long-term perspective. We think this stock has already confirmed a bottom around 58-59 zone, so we don't expect that to get retested. Only thing is, as I said, if we get levels of 65-66, I think it should be a good entry point.
You reckon it will first drift towards 65-66, which is about 15% lower from where we are right now?
Yeah.
Okay.
Yeah. And that's because that Nifty consumption index is projecting that levels here.
Fair call. Okay. So those are some other stocks that you need to monitor in the session today. By the way, like we said, while we watch out for Inox, SpiceJet, Phoenix and the likes, and we discuss Voltas, one brokerage stock which looks attractive today or has some bullish names, I'm not saying it's looking attractive, is Lupin. Quick views out here, Mayuresh. If you track Lupin, Credit Suisse believes that it's a grey sky scenario, pricing in only the India and the EM business and not the other businesses. Is Lupin a business that you would look at currently?
So it's a good business, but unfortunately, I think it's run into a lot of turbulence over the last few quarters. FDA-related issues. Then we obviously have also the ANDA approvals and how the entire scenario is going to play out in terms of exclusivity, remediation costs. You've got R&D expenses. So there are a lot of moving parts for Lupin, which is going to create headwinds in terms of earnings profile. I'll wait it out. Though I think it is a very sound company with a very sound business model. I think all these hindrances are going to put brakes in terms of operating cash flows improving. They might at some point of time. I don't think I'm too enthusiastic at this point of time.
Devina, the Shanghai markets too have come off a little bit. I mean, they were 1.9% higher, now currently 1.4. But our screen is just not exhibiting any kind of optimism which would have come in from the US market performance.
Yeah. I just want to actually say that while we've got about 5 cases reported, we don't know how this will go, but during SARS, we still had 3 cases reported. I mean, it's not like, we're drawing a parallel, and also the fact that, the mortality rate for coronavirus is much below that of SARS, though the contagion rate is much higher, so probably that's what's spooking everybody a lot more. 11,141, that's up about 20 odd points in the Nifty, SGX Nifty. Pre-open on your screens, the Nifty 50 as well as the Sensex open in the green, and that was more likely, but I don't know how long this can hold on. Let's see. Individual stocks, and that's the focus. Indian Oil, that's up about 5.5%. Tata Steel is up about 3%. Reliance Industries has moved up about 3%. You've got SBI 3% higher, Yes Bank about 3.5% higher, Eicher Motors 2.9% higher, Coal India, TCS, Axis Bank, that's where you've got a percent and a half gains coming in. Bajaj Finserv up 1%. Hdfc Bank is also higher by 0.75%, so 1188 on the stock. HCL Tech at 551. Britannia, Bharti Airtel and Bajaj Finance. Bajaj Finance at 43.70. So that one looks to get cheaper. Z is down about 4.5%. Bajaj Auto is down 3%. Hero MotoCorp. So Auto again in the red. Kotak Mahindra Bank down 1.5%. HDFC Bank now moves into the red. So 1170 for HDFC Bank. Hindalco, M&M, Wipro, Asian Paints marginally in the red. Breadth of the market more positive, 1:2 at least at pre-open for the currency, 72.45. So there has been some strength that's come in into today's session. 72.45. That's about a 27 paise dip.
Okay, we'll just get in a couple of voices on this as well, but very quickly, one or two names. Just want to mark Inox Leisure, SpiceJet, Phoenix Mills, Delta Corp. These were the ones that cracked a lot in trade yesterday. Let's see if there are bounces. For now, showing an uptick. Let's wait and watch if this lasts. By the way, the Nifty and the Sensex in the first 1 minute are exhibiting a much different picture to what the SGX was indicating. Let's see what would lead if indeed we have this kind of a start. And whether we sustain that start or not. So that's the other key question that you got to monitor. So these are a few names that you got to monitor. Bajaj Auto looks like starting off wobbly yet again today, so you got to keep that at the back of your mind. And watch out for stronger names like IRCTC, Vinati Organics, Deepak Nitrite. Those were the ones that bounced back very strongly in trade yesterday. Let's see if those moves continue. Okay, I think the currency is an important monitorable too. Let's get a quick sense with Bhaskar Panda of HDFC Bank. He joins us right now on the show. Mr. Panda, good having you. Thanks much for joining in. Yesterday there was a bit of a scare. What do you think the near term looks like on the rupee?
I think, see, if we look at yesterday, it was a panic reaction, I would say, rather than, anything planned. That panic reaction obviously will have to be, come back to reality. So, which is today, I think it will continue to, consolidate around maybe 72.50 or 72.40, and then probably it might go higher from here. Why I'm saying it will go higher? Because of very technical reason is the fact that we are closing above 72.20 consecutively. So technically it should go and target 73.09, which is the next target. So for today, probably I will say that rupee would be more of a range-bound trade between 72.40 to 72. Probably 60 is the range that I'm looking at.
Mr. Panda, just want to get a sense from you. Obviously, the rupee will also move in tandem with the rest of the emerging market currency basket vis-a-vis the dollar. Now, if you start to see things improving in the US and there is more strength that comes back into the dollar, to what level do you see emerging market currencies, and particularly the Indian currency, therefore, getting impacted? What's the lows that you're seeing, if that happens?
So, see, today, if you look at how the markets have reacted overnight, most of the stock markets are in positive. So, probably our stock markets will be in positive. So, sentiment that way will be actually positive. However, the oil prices also have moved around $2 to $3. So, which is slightly negative from the rupee perspective. So, given all these things together, so and as I mentioned earlier, technically, rupee, against dollar cannot really, go back to, below probably 71-80 days. So I feel there will be a possibility for dollar rupee to moving towards 73 rather than 71.80.
Okay. Okay, Mr. Panda, we leave it at that. Thanks much for taking the time out and joining us and giving us your perspective.
Okay.
Okay, just quick perspectives and top calls from our experts before we thank them as well. Brijesh, to you first, your top call for the day today.
I would look for a long on Bajaj Finance at open. Look for a target of around 46.40 on the upside.
Okay, and Amit, what about you?
But I would suggest opening short on IndianOpen Bank around 1090 levels. Stop loss would be around 1130. I'm looking for a target of 1000 basically.
All right, gentlemen, we'll leave it at that. Thank you very much, Gautam, as well as Brijesh, for joining us this morning. Important also to bring in one more prominent technical voice to get a gauge of these levels. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, was joining us right now on the show. Gautam, thanks very much for taking out the time. We could have probably got you earlier, but it looks like we're seeing a little bit of a bounce coming in from those lows that we touched. 11,200 on the index as per pre-open. Did this surprise you, the ferocity and the pace of the fall?
Morning, Devina. Well, not a surprise at all. I think the pace was a bit of a surprise, but the direction is something that we called for. I think since the market broke that level of 12,000, you had one negative factor after another on the charts. And we ourselves were working with a medium-term target of about 11,100 on the Nifty that has been tested yesterday. And now I think the market is at a very, very important support zone. I would be surprised if this zone gets violated immediately. I think the market is oversold, not just technically, but even sentimentally. And I think the chances of a sizable rebound from current levels is quite high. I think a lot of the bad news has already been discounted. And given what you heard in India yesterday, it seems people have extrapolated it just too much. And that's exactly what the charts are trying to capture. So the way we see the market action, our targets on the downside were tested yesterday. The market is oversold. We are in for a nice bounce, that could take the Nifty back to levels of 11,390, 11,500, maybe even 11,600. And in this phase of recovery, I'm sure you're going to see a lot of stocks bouncing back. And it's not just for India. If you look at many world markets, including US, Europe, I think they've all tested their medium-term support levels in the last couple of days. So it's almost as if the charts are suggesting that there is going to be some positivity. I think the news flow will follow, and hopefully we will get that in the next few sessions.
Would you advise a trade then, Gautam, at this point on either the Nifty or the Nifty Bank? The Nifty Bank probably looks structurally weaker than the index itself.
Yeah, right. I think the Nifty Bank is weaker, and I think the reason the indices came back yesterday in the second half was because the Sensex and the Bank Nifty had pending targets on the downside. So we were working with 28,500 of the Bank Nifty, and even the Sensex, target was pending. And those targets were achieved in the last couple of hours of trading. So you have a scenario wherein the Nifty, Bank Nifty, Sensex, and the mid-cap index have all tested their support levels, medium-term support levels in a session like yesterday. And because, as I said, on most technical studies that we tracked, markets are extremely oversold. I think a quality bounce is coming. And since the price destruction has been across the board and so large, I think the scope for recovery is there. I know people have been taken aback with what has happened in the last 3 or 4 days, still trying to digest this move. But I feel that what happened yesterday was overdone, and it's a classic case of capitulation, which I thought took place in the markets yesterday. So I would be very interested as to how the markets close today.
So, Gautam, just lay out that scenario. If indeed the markets don't do too much today, there is a big global event slated later on in the day, which might impact markets tomorrow. But if the markets are at 325, show your tick, which is around 11,200 for the Nifty, would you believe there is merit in taking a fresh long position largely on individual stocks or the index?
I think so, Neeraj. I think if the Nifty even stays a tick above 11,100, I'm comfortable. I think this is a very important support based on the number of studies that we track, short, medium, and long term. And at some point, the market just had to find support. And I think 11,100 is my number. So as I said, if it stays even a tick above the same, I would want to believe that there is a large pullback coming, because not only is our market oversold, but I think many markets in the world are oversold. However, do note this is a temporary view. I think we are only talking of a near-term pullback, a near-term retracement of the kind of fall that we've seen in the last 3 weeks. The medium-term charts are still in bad shape. So post the expected recovery, which I just spoke about, I think the markets will go to much lower levels, but I think that's going to take a lot more time.
So this recovery, what quantum of recovery are we envisaging here, Gautam, and what could lead that? Because yesterday too, even when we were up, the high-quality financial names, the Hdfc banks, Bajaj Finance, Kotak banks of the world, were very, very muted.
Well, Neeraj, yesterday's recovery was a popular one, was a consensus trade. You know, the fact that we opened 150 points higher and just about everybody wanted to play the recovery, the market does not let consensus latch onto it. And that's probably the reason, you know, with what happened in the second half, I think people have pretty much given up on the market. And this is absolutely the right time for the indices to show their true colors. And I think it is going to be on display in the next many days. All the pockets that have seen significant weakness, I think metals, auto, to a certain extent banks, where we are medium-term negative but short-term positive, and not to forget healthcare and IT. So barring an FMCG, barring an capital goods, where we will remain extremely bearish, I think all of the sectors which have seen price damage are likely to see a nice pullback to the tune of 3 to 5% on the sectoral index.
Okay, Gautam, then what does this do to the previous Nifty targets that you had set out for the year? Does it change materially? And any different setups that you're seeing across sectors?
Well, I think there has been a major sectoral shift in the last couple of months, and we were very clear getting into 2020 that this year is not going to be about the index. This year is going to be about stocks. It's going to be far more difficult to take out returns from this market because very handful of stocks or sectors, you know, are doing well. Having said that, I think since we turned bearish at around levels of 12,000, you know, because you got indications not just on the daily charts but on the weekly and on the monthly charts that there is something very unique happening in the current market. So post this downtrend, which I think can carry on for another 3 or 4 months, I think we will get back on track. But for that, I think it's going to take a lot more time. So we'll just wait and watch and just take it one step at a time. Because given the kind of news flow that you have right now, you don't have visibility beyond a few months. And that's probably the reason I don't want to talk very long term here.
All right, got that. Gautam, it was great chatting with you. A quick perspective coming in from Gautam Shah of Goldilocks. We're just minutes away from market opening, and we tell you all that you need to know to stay ahead and trade today. Aviation stocks are in focus as jet fuel prices are cut by 10%. This is the second straight month of price cuts.
Hero MotoCorp's February sales fell 19% on an overall basis to 4.9 lakh units as against an estimate of 5.1 lakh units.
Newly appointed statutory of Cox and Kings says that the consolidated financial statements of the Promethean are allegedly forged financial statements.
Among company defaults, DB Realty has defaulted on payments of intercorporate deposits worth 85 crores. Reliance Capital too has defaulted on term loan due to Hdfc and Axis Bank.
HSBC has upgraded Marico to buy. It has also raised its price target to 400 from 370 earlier on. Says this sharp correction seems to be overdone.
Well, those are a few stocks that you need to monitor. Mayuresh, a quick thought here on Yes Bank. We've just done a story this morning wherein there is the new investors are apparently putting in some stringent conditions, including a sovereign bank being a necessity in the investment mix. This arguably delays it, but lots of things happening around Yes Bank. What would you do here?
No, I'll wait it out. I think we've said this in the past as well. I think there are too many moving pieces.
I know you won't buy it. Sorry, let me rephrase my question.
Yes.
Would you reckon if people a lot of people still have Yes Bank in the portfolio, if you were one amongst those, would you at the current point of time swallow a hard pill and liquidate the position?
So again, I think a lot has got just hit in the price, very frankly, Neeraj. Yeah. So I think how much beating does the stock take here on? I think it will not happen for results, right? Because results are expected to still remain weak over the next 2 quarters. Capital raising, I think there will be some positives coming out of that. Whether any stringent norms, as you had put out, I think that is a necessity because I think the framework that they're moving in at this point of time, the kind of provisioning examples that they need to do, I think that balance sheet dynamics has to change for the better, right? So yeah, I think the worst is probably captured in the price. Can the price go lower? There is a possibility. Nobody can rule that out. But in my opinion, I think a lot has got gestated in the price at this point of time. So if you have not sold, unfortunately at higher levels, I think you better hold on with the hope that something positive happens for the stock going.
Because what's your downside, right? It's just $32 now.
It's 32 strong rupees. I mean, depends on the quantity that you buy.
Aryabhatta has invented zero.
Zero.
All right, I think we have 25 seconds left to go for markets to open, and that's going to be important. The closing Nifty 50 on pre-open is up 0.75%. That's 11,217, Neeraj.
Yeah, let's wait and watch how we start off and whether we gain from these levels or no, and what leads those gains. I think that's the more important thing. What kind of stocks are taking it higher? Can Reliance bounce back? Can Hdfc Bank bounce back? That's the question that we'll get answered. Well, 0.85%, 0.66% for the Sensex, the Nifty Bank about 0.6% as well, so 200 points in the green. We're now 1% higher for the Nifty, so it's not a bad start. Let's just see if this lasts. The mid caps and the small caps should also come up on your screen. Well, 1.37% higher for the mid-cap index, the small caps 0.8%. Remember, frankly, what we are doing right now is just recouping yesterday's losses. So to an extent, because yesterday we cracked quite viciously in the last half an hour of trade. Let's see if we build on more from here. 48 stocks in the green, 2 stocks in the red. Bajaj Auto continues to grind lower. It gets beaten down almost every single day now. And Hdfc Bank is still lower. They had this buy-side analyst meet. I don't think the buy-side is into the buying mode as yet because the stock is still in the red. And Kotak Bank too. By the way, like I said, I think high-quality names, Hdfc Bank, Kotak Bank, I don't see a Bajaj Finance here, but those were very soft in trade yesterday. Let's see if Bajaj Finance has some different moves. It's up about 1.5% or thereabouts in trade today. But what's doing well? Eicher Motors, was 6% up yesterday, then corrected and ended about 2% higher. Another 3% added today. JSW Steel, Vedanta, Tata Steel, these metal names are really seeing a pullback. I mean, maybe the global coordinated central bank action is very positive for the metal names, and that's why they are doing what they are doing. Yes Bank, 2.5% higher. Infosys has some gains for itself. ICICI Bank is a clear favorite amongst the banking names right now the last few days. And watch out for HDFC and Reliance Industries. That's up about 2%. So very strong moves by the big boy. It's gotten clobbered the last few days. In today's session is doing okay for itself. Very quickly, a couple of stocks that I want to mark from the broader end of the spectrum before I hand it over to Devina for what's happening across the space. Firstly, the companies that got pummeled in trade yesterday. Inox Leisure bounces back 4.5%, SpiceJet 2.5%, and Phoenix Mills about 1.5%. So these three names come back in the session today. Let's see if this pullback lasts. The other thing is what's happening to the companies on which brokerages are bullish, Lupin and Voltas, and both of them start off well in trade. Devina, what are you spotting?
Propac is up about 5%, Rallis is up about 5%, Parag Milk Foods is up 6%. So there is interest. Dewan Housing Finance is back up about 4.5%. You've got BASF India, which is up 4% again. Remember, the last 7 days tally, the stock's up about 25%. Now, Future Consumer, which had been beaten down quite badly in today's session, is up. You've got the likes of a Thyrocare, which is up 4.5%. Should also pull up Metropolis and Dr. Lal Path to see where they placed in today's session. Metropolis is up about 3.25% at 1968, while Dr. Lal Path at 1700. So that too is holding on. Indiabulls Ventures 4% higher, Vodafone Idea 4% higher, Piramal Enterprises, AB Fashion, ITGC, Hathway Cable, Sadbhav Engineering are some of the other names that are doing well. The breadth of the market is extremely strong. Losers include the likes of Subin Life, so now that's lower circuit after lower circuit for that one, no exit. The likes of an Indiabulls Real Estate, which is down 1%, quite contrary to Indiabulls Ventures. Everready is down 0.5%, and Indian Hotels is down about 0.5%. Bharat Forge 1% lower. 975 stocks are advancing, about 208 stocks decline. So the breadth is positive at the start of the trading session. Let's see how we hold on. We're approaching 11,300 on the Nifty right now. Anything, Mayuresh, that if you had the conviction to buy now, you would put your money into?
So I think two broad sectors. Again, I think you covered one of them in the morning itself. So city gas distribution companies probably get least impacted in terms of their entire scare, right? Gas prices have plummeted, so I think below $3 MMBTU for LNG. I think it's going to be a huge saving grace as far as the gross margins are concerned for all these players, and the volumes are holding out. So I think gas distribution looks very, very interesting. The other pocket which I've continued to like is specialty chemicals. And within that, I think if Viniti Organic shows a very strong price move, what you've actually seen in terms of their key product segments, ATBS, for example, I think the Lubrizol market share that they'll probably gain because they've exited almost 60% of the sales right now. They'll capture that even more. Yes, 30% is determined by oil and gas, but with prices going up, largely FY19, 233 rupees realization per kg, expected to inch higher to almost 260, 270 odd. The other two segments, obviously, butyl phenols, one of the segments that they are venturing into low margin business, but the street has probably just stated that. But with a lot of facilities getting shut down, I think the revenue growth estimates that a lot of analysts had of 8 to 10%, I think the management is very, very hopeful.
And they're going to be the largest in India.
Exactly.
With butyl.
Exactly. So I think leadership position, you've got price dynamics on your side. And largely, again, I think the estimates for top line and earnings growth improve because of the underlying conditions as well. So if the price action sustains for Vinity another 3-4%, it will exactly fall in our pivots for buying as per Cancelim. I think that also probably looks interesting within the specialty chemical space.
All right, that's Vinity Organics. Something that you will avoid?
So autos, as I said, I think would clearly watch out for this quarter's numbers because it's going through a lot of transition at this point of time, both domestically and globally as well. Metals, again, I think it's more sentiments at this point of time, but again, the demand dynamics need to really catch up. Chinese imports apparently have started significantly, so I think steel prices might just come off. What I've done in terms of channel checks was that increased HRC prices, the Chinese HRC prices FOB apparently were around $530 odd. There is some talk that they might roll back 1,000 odd rupees per ton in terms of HRC prices, which they were expected to increase significantly and which they had in the past few weeks because of lesser supplies coming through. So I think I'll watch out, I think, for sectors which will still exhibit weak earnings, which might be auto and metals.
Mayuresh, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your time. Okay, viewers, watch out. Just to recap what's doing okay in the session and starting off well. So we have the metal names being top draw. JSW Steel up about 3.5%. There is Tata Steel about 3% and Vedanta about 3% in trade. And HCL Tech, yesterday's big gainer. Of course, it corrected as well in line with the markets, but yesterday's big gainer, HCL Tech, starts off another 2.5% lower. So selectively watch out for the IT names as well. I think it'll be interesting to see what happens to large cap IT in the wake of what people will arguably believe risk money coming back if indeed the global central banks take coordinated actions in the session later on today. Mihir Vora, Director and Chief Investment Officer at Max Life Insurance, joins us on the show with his thoughts. Mihir, so good having you. Thanks much for joining in. What do you expect? I mean, this coordinated central bank action, can it thwart the negative sentiment around world markets? And India had that peculiar case of being slightly different than the rest of the world yesterday because of the two new detections. Can that overpower the sentiment around that too?
See, I think it was always expected that if markets really go for a tailspin like they did last week, central banks will at least talk about doing something. Whether they can or not is a different matter. But that expectation is always there, and that central bank put concept has been around for quite some time because of lackluster global growth and the need to keep asset prices inflated globally. So I think it's no surprise that the market is beginning to expect such a measure from the central banks. We did see some murmurs from the Bank of Japan yesterday, and today there is this meet of the G7 central bankers conference call to discuss the way forward. So keeping asset prices and market sentiment positive is a priority because I think the Western world is really dependent on stock market wealth. Probably less so in India, but the Western world is definitely, given the pension funds, etc. requirement. So this is to be expected. On the face, or given that this is coming at a situation where you have such negative news, at least in the short term, from the coronavirus, we can see these whiplash kind of moves, both plus and minus in the markets like we've seen in the last few days. So I think it's going to continue for a while.
The downside, what you mean?
No, this volatility, 3% up, 3% down, those kind of moves will continue because in the short term, you really have, concerns about the virus spreading globally. Till last weekend, it was looking like China was the epicenter and probably it will get contained to China and South Korea and Japan to some extent. But this week, the news has been a little bit negative where we see more countries, beginning to see infection. And obviously, there is, not going to be one patient. There will be multiplication. So the good news is that China has been able to control it in about a month and a half. So the kind of the rule book or the SOPs, operating procedures are known. So my guess is that countries will be able to contain it in the next few weeks or so. But it's going to be a bit of a pain. The human cost is of course there, but it's not such large numbers because the mortality rates are so low. But the stoppage in economic activity that is required to contain it is what is spooking the markets.
Okay, so let me ask you, domestic institutional investors have still been buyers, even in this falling market and the turmoil that we've seen. Monthly, there is inflows coming in through the mutual funds. That money has to be deployed.
Yes.
So in light of that, these levels should remain attractive? I mean, considering that at least domestic money will continue to pour into the markets?
Yes, they should. Only thing is we have seen a lot of action by FIIs. We've seen about 12,000 crores of selling in the past, about 2 weeks or so. That's close to a couple of $1 billion.
But now this liquidity comes back.
It should. We've also seen a lot of movement in the F&O. So if you look at the FII futures positions, they actually have gone short by almost $1 billion extra. So not only did you have the impact of $2 billion of cash selling, you probably had a $500 million of F&O selling also. So this will get unwound, you're right, if things come back. If global liquidity, as we are talking about, is even more flush than what it was before, then we should see some bottom at some point in time.
Okay. From our market's perspective, and since you said that these whiplashes could continue, they'll die down at some point of time and then we'll return to normalcy. What is normalcy then? I mean, here, let's assume somebody is able to digest the volatility, is not doing leverage trades and wanting to invest right now. Are those... somebody made a point yesterday they should play the recession playbook. Would you do that? Or would you indeed buy into quality names right now if you have the stomach to digest the volatility?
So it's always a good time to buy quality names, especially the consumption names, because...
No, I'm just thinking of tactically.
When you say the recession playbook, what does it mean?
So Jeffrey Dennis yesterday was saying that typically in a recession playbook, you would have gold higher, safe haven assets higher, treasuries higher, and equities lower.
Right.
Would you play that playbook, or would you not?
It's not that cut and dry for India, because the linkage between the bond markets and equity markets and the commodity markets is tenuous in India. I would not kind of use that rule book in India.
Okay.
I would rather look at the bond markets separately and the equity markets separately.
Okay, so buy into quality right now because the opportunity is fairly lucrative, valuation-wise.
Valuation-wise, a lot of stocks have come down to almost 5-year low valuations. Even in some of the large cap cyclicals, you are seeing 5-year low valuations.
You're playing cyclicals?
Well, they're looking tempting, though by heart I'm a growth investor, but some of the names are really looking tempting.
So I assume most people who wanted to invest at levels of index touching 12,400, for them this is a party. I mean, it's an opportunity to get in at a much lower valuation and ride the rally back to 12,400 as and when it happens. So technically, from a growth investor standpoint, who's ready to put in money for the next 5 years, this is opportunities galore.
Absolutely. Only question is whether you want to do it in one shot or whether you want to time it out, because we've just seen the beginning of this scare, so to say, for India, and we don't know how it's going to pan out. So my guess is that this uncertainty will keep a bit of a cap on the sentiments, at least for a few weeks, till the time that we are comfortable that, okay, it's only restricted to this and this and this. Because right now we can't quantify the risk. And as I said, the human cost is high, but it's not very high in terms of numbers. We have seen deaths. Of course, it's not good, but it's only a few hundred deaths, maybe a couple of thousand in China, etc. Not very material in the global scale.
Because the mortality rate is
very low, but
is lower.
To contain this, you need to stop a lot of economic activity, and that's what's hurting the market. So you might continue to see downgrades happening as countries try to stop more and more economic activity to contain this. Manufacturing, travel and tourism, business meetings, everything's getting shut. What is the impact on EPS that you see for the rest of the year? For India, it's very difficult to quantify because 50 to 60% of the growth is anyway coming from financials. So I don't see too much of an impact on the financials. If there is a volume slowdown in loan growth, they'll probably use pricing power to maintain their earnings. So financials, especially the private sector, will kind of maintain their growth. You may see most of the cuts, if any, on the global cyclicals, which is metals, oil and gas, utilities, those kind of names.
May I ask you, this is not asking you for a comment on a particular company, but when you look at we have the ushering in of the first cards business in the country, and the street is completely divided about how do you value such a name, so on and so forth. I'm not asking you for the right valuation because that will amount to a call, but I'm asking you whether you would look at it on a price earnings to growth basis, whether you look at a price to book basis because it's a pseudo NBFC of sorts, which is into the lending business and a fee business, and whether the niche premium that such a business could attract would be similar to what maybe the first AMC got or first small finance bank, etc., would have gotten, or now those premiums may not exist? How do you view this?
I would not say those premiums may not exist, because those premiums are still there. The high P stocks have not corrected by like 50% yet. So I think there is a space and demand for good quality. And the premium for visible growth is still going to remain, I think, in these uncertain times. So I would say any business which delivers good ROE, ROCE, which is the case here, and has good visible growth for the next 2, 3, 4 years, will continue to command premiums, irrespective of whether it's NBFC or any other sector.
Mind you, viewers, this is not a call from Mihir Vora about SBI cards. He's just talking about businesses at large which may attract levels or investor interest in any fashion whatsoever. Mihir, so good chatting with you today. Thank you so much for taking the time out and being with us. Important day to have you, so I'm glad you were here with us.
Absolutely.
Thank
Pleasure.
you.
Thank you.
All right, that's the view from Mihir Vora. We need to slip into a break on the note that the markets are still doing okay. Coming up, we discuss business outlook with Abhinav Gupta of APL Apollo Tubes. Mihir was speaking about cyclicals looking strong. Let's try and figure out how Abhinav uses business. And then IRDAI is considering allowing life insurers to offer indemnity-based health policies. We examine the implications with former LIC chairman SB Mathur.